audio mixer. Oh, I guess I am. I gotta go get my iPad. Morning, Joe. Let's see. We're gonna have to turn the volume down. We're gonna go to YouTube. Hopefully, I have enough. I think I have enough juice in it to There we go. Hit the thumbs up button. Morning, Cecilia. Hey, Cecilia, I'm serious. If you need help, just ask with TrendSpider. I feel bad that you're confused on that one. It is a program that is not like, Seeking Alpha is plug and play. You know what you're getting with Seeking Alpha. Hey, Zephan. Well, I was traveling. This last week I was in, I just got back from Philadelphia. So you haven't missed much other than me being cool on the plane and looking like I actually have a job. Because I was working. I was next to this dude. Morning, Scott. And morning, Mark. And I was taking selfies for the newsletter. Dude looked at me, and I'm pretty sure the dude thought I was somebody famous, but we all know I am not. Okay. I posted this. If we go to a daily, and we don't need the. So I posted this on the on Twitter and in the Facebook group last night. Tesla is. I'm slightly worried about Tesla. In pre-market, it is at 227. And I pulled the volume shelf back, and you'll see the volume support is at 233. If we don't open up at 233, and we probably won't, it's at 228 right now. I'm worried that you're looking at $200 again. Doesn't mean I'm telling you to get out of Tesla. Yeah, Cecilia. Here's my guidance for you, Cecilia. Watch the video I did with David, and then go over to TrendSpider's YouTube, and I think you'll get some really good understanding of TrendSpider at that point. They don't. My one complaint about TrendSpider, and part of what my welcome letter is about, is the onboarding process is kind of shitty. They don't do a great job of, hey, you're a new user, you don't know much about charting, here you go. And that's why I think signing up with me, you get the algorithm, you get the links, you get to import everything, but your setup is still not set up. So you have to find the indicators and things that you want on your screen to actually understand it. So, but I was serious about picking one stock and then just tracking it for a month and then doing paper trading on Savvy Trader for that one stock and see how you do. I mean, you could use the algorithm as entry points, that'll track, and then, buy and sell in Savvy Trader. But I think you'll get there. You seem smart enough to know. But Tesla, I am worried that it lost support. So this trend is back from January. And yet, remember, on a trend line, you have to hit 3 points. That's the way I was taught. That's the way I understand it. That's the way I look at it. You have to hit at least 3 points. So this is a clear 3-point kind of trend line there. This one I pulled back to the highs in November 2021, I believe it goes all the way back to. But it's a downward trend. So you find the bottom there, find a way up, and then you get the downward. And this crossing point is typically a, do we break it? Do we break it on the way down? Do we break it on the way up? But that crossing point right there at 264, it definitely looks like this top trend, the downward trend. You're making lower highs, and that's not great. So, see, in this trend line, you're making in the bottom trend line, you're making higher highs. You're going from here to here to here, and then your lower highs are right here. So you're trending down. Now that you've used this as a resistance level, I'm slightly concerned about it. Plus, the fundamentals are just, fuck. When Eli says, Cybertruck is our worst nightmare. I didn't say that. I forget his exact wording, but he just was not upbeat whatsoever. That boy looked beaten down. So, let me make sure I'm on the right chat. I've got live chat. Okay, there we go. Let's do some scans. I know I'm late, and I honestly don't have that much. Oh, I don't want that scan. We're going to go scanner. And here's the thing about Tesla. And I got it in my notes. I think my notes describe it perfectly. 16 per, and I'll put this in the newsletter. And there's a chart that I can't show on the newsletter that shows the quarterly revenues by segment, total automotive, services, and then energy. And you'll see services is growing, but the overall revenue is declining. And the key point about Tesla has always been the margin. 16% margin is downward since once a year. 1 year ago when it was 29%. As it moves down, Tesla becomes more of a car company. As it moves up with those margins, it becomes more of a tech company, because those services revenue are high margin business. That's essentially full self-driving and things of that sort. The total automotive revenue, that becomes more of the quarterly revenue, and that continues to decline. The services and the solar and the energy generation needs to increase in order to have the total revenues increase, because the automotive is declining. And as that automotive kind of, if the other services don't increase, the margin isn't going to increase. So it's managing he's managing a company. It's a tough gig. Morning, Nevin. And with yesterday's downturn, the lead on my notes is just bond rates, the 10-year. In fact, let's go to the Fidelity, because I like showing the Fidelity bond rates. News and research, fixed income. Here you go. The 10-year right here, 4.96. If you listen to any of the broadcasts and things, Jamie Dimon a few weeks ago came out with a crazy, what is that? A crazy, it's Dan Ives. Why is that not uploading? Man, my dog is snoring up a storm. Poor little fucking Daisy. Notes from my phone. There we go. Okay, now I've got it. Now it picked up. We're going to do... And I got Meta in here for you, Cecilia. I'll go over Meta. But that 10-year is driving the market down. The 10-year at 4.96. Jamie Dimon a couple of weeks ago said the Fed is going to have to go to 7%. If that's the case, it's super troubling because that's what's bringing the market down. And it's right now at 4.96. If you go to 7, we are going to come down even further. And that's what's concerning because nobody's buying our bonds. The bond market is shot. Look at the levered ETFs. TBT, UVIX, PSQ, UVIXY, HIBS. Oh boy, we have a cross up on SQQQ. And it's hit the 200-day. Has it held it? No. I think the 200 days at 1939, and it's ironically, it's trading at 1939. Oofa. Low cost Vanguard. Let's see if anything crossed up here. No. It's been a bad day. Any sectors? I want to look up XLU. And then we'll get back to the Dow and stuff. Look at XLU since we went over it back here. See that line right there? Let's see. Strategy tester. We'll go to the 4-hour. We'll run this. Look at that. Cross up at 57.15. And I said the 200-day at the beginning of that gap is about 12% up. So far you've done pretty well, but that button hook is looking ugly. But I still like XLU for long haul because I think that one is Dow, IBM, Mainstay Tech. We're going to look up the NASDAQ 100. Zoom. Look at Zoom coming back. And S&P. There it is. IBM, okay. We didn't have that much yesterday. Yes, let's look at SPY on the 4-hour. Man, I don't know if you can hear my dog in the background. My dog is yeah. That gap up there is just, you couldn't get through it. I mean, that gap since September 20th has been in range. Can't get through it. Okay, let's see. We're going to go, there's this. Man, I have a lot in my, in my link tree. Let me see. Oh, you know what? Maybe. Let me see if I can do something here. see. There we go. There we go. Perfect. I'll use that. We'll use that for... so now I can show these things. Perfect. Go back to Safari. Okay. Wah, wah, wah. Man, my dog is crazy. Okay. Let's look at SPY. Let's look at the Qs. I'm going to draw this. Boom, boom. I'm still holding, Christian. In fact, good point. Let's look at PXD. I mean, tops you're going to get is 257, 260. The issue is this, they're going to announce some type of special dividend. I don't want to sell while it's, I mean, that trend is super strong. I don't think that's a bad play, to be honest with you. 26% gain, that's a crazy good play on one that's yielding. I mean, shit. Let's look at Seeking Alpha. Am I logged in? Yeah, I am. Let's look at Seeking Alpha because their dividend is Nathan, I'll look at Amazon. I'll put it in my notes. Hold on. I got requests after Meta. We'll put in Amazon for Nathan. I'll look at it, Nathan. This is what kills me is the forward dividend yield is 1.96, but it's always been a special dividend. So if you look at dividend history, they've been paying special dividends. Look, special dividend, 59 cents. That was just back in September they paid. Special dividend, $2.09. That was in May. And then $4.80 special dividend. So the 59 cents is why it dipped down under $200. I have an article here. Let's see. Here we go. And Christian, you may want to roll this in. Devon Energy is said to be looking at Marathon Oil or Crown Rock would be Devon's largest deal. And Marathon Oil is the only, I think Crown Rock is a private. And it looks like it's about $10 billion sale. So, Marathon most likely is going to take off from that one. But I'll include this in the newsletter. But this is what I'm looking at when PXD announces earnings on October 30th. I do think you're right in selling. I just can't get my head wrapped around. I don't know enough about dividends and sales and things of that sort and to calculate stuff. The per share price, as far as what I calculated on the day that they announced the earnings in the agreement, is $257. So you're trading at $255. And if we go over here to FinViz and we look up PXD, the 52-week, you're 2% below the 52-week high. So, which is an all-time high, I believe. Let's go back and look at, we'll look at yearly. Yeah, you're at an all-time high. All-time high. So, sorry, 2022, you got to 288. Yeah. Christian, if you don't have Exxon, I think it's a great play. I think that's a perfect play because Exxon is just one that, I bought, like I said, I think it was June, 2020, June 2021, somewhere around there. I bought 5 figures, which is now well into the 6 figures of Exxon. So I did well with that one. I've done well with this one. This one's a 5-figure play. So, and boy, I got to tell you, I didn't think it was going to get here this quick, but Netflix is over 400. I'm going to add more. Death Grow's right there. Look, the 200 days at 415. I said it before, and I'll say it again. It's going to cover this gap up here at 470. Just as much as this one's going up, Tesla's going down. There's people outside my house, and I don't know why. Okay. I think I've got enough scans. I've got enough to go on here. Okay. Let's look at it. Okay, I'm going to start. We're going to go over this shit. Here we go. Good morning. It's Thursday, October 19th. I am back in my home base of Atlanta. Yo, 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 yo. What up, Atlanta? Big A. And when I'm talking Big A, I'm not, usually I'm from Jersey, from New York. Big A usually means you're calling somebody that cuts you off in traffic a big A-hole. No, Big A is big Atlanta. Let's talk about yesterday. Boy, it was a bad day. At the beginning of the day. Turned out to be a good day at the end of the day. And I had some fun experiences. If you want to read the newsletter, by the way, yesterday I put out a good newsletter. We will go over here. And where is my... Oh, come on. Here it is. 1018 pod. NVIDIA should be a buy on the pullback. Wait, is that 10.8? Yeah. Oh, I didn't. Plus Tesla and Netflix earnings. I was sitting on the plane. I did this from 30,000 feet up. Boom. Loved it. I even took that selfie right on the plane. And the guy next to me looked at me like I was just a moron. A complete freaking moron. But yeah, this tells my stories about everything. Tells you about Tesla and Netflix. While I like the setup on the fundamental, this is what I said about Netflix before the earnings. While I like the setup on the fundamental basis, raising price announcement, additional revenue from password crackdown, I'm worried their guidance on the ad tier is going to overshadow the positives. I'm holding and optimistic, but will look to dollar cost average if it trades down like I've done in the past with this stock. Well, Netflix, listen, to take the cat out of the bag, Netflix kind of killed it. I said with Tesla earnings, I'm big on both. And I like, Tesla in particular will have some goodies like Cybertruck updates and perhaps even some other pump catalysts. What they will have to overcome are the margin questions if we do see that decline. I remain bullish on this stock despite the valuation. At no time should you feel comfortable shorting this stock or playing TSLS or any of the other short TS ETFs. Overall, I like the way the stock is trading along the 200-day. Well, we'll talk about this. This one, probably bad guidance in the short term, probably not long term, but we'll go over that one. But where are we with SPY? Yesterday, I talk about this all the time, the button hooks. So, think of a circle and a half circle. That's a button hook. So the half circle down here at the bottom where you're taking off and you have confirmation over that 9-day, you buy. The button hook at the top where you lose your confirmation below the 9-day, that's when you want to be careful and you want to sell. You don't necessarily want to buy into something like this because you'd rather miss the first 4 or 5% and get the next 10% than to try and, time it out. So you did have this death cross. The 50-day still moving negative. This gap that I talked about in other newsletters, it's providing some resistance. It's hard to get through that one right now. There's too many negative things going on. The biggest negative right now, this is bond rates. A look at bond rates on the Fidelity website. If you go to this U.S. Treasury, that 10-year bond rate, it was at 4.96 just before. It's at 4.93 now. You're seeing the futures turn around. And the reason is because this is starting to pull back a little bit. A few weeks ago, Jamie Dimon, or it may have even been Friday, he said that he thinks the Fed is going to have to take this to 7% to fight inflation. Well, if they're taking this to 7%, the problem is the U.S. with its debt doesn't carry the same weight. Oh my God, it's absolutely going to get paid back. So the bondholders, the buyers are not there. So what happens? The rates continue to go up. And that's dangerous because Japan, China, and others are just not buying our bonds. And that's what's driving these rates up. They continually have to pay more in order to issue bonds because the buyers aren't there. So SPY, on the other hand, with the bond rates going up, the value of those bonds is going down, by the way, too. So the value of the asset is actually going down while the yield is going up. And here you have the stock market being dragged down. So you're in this kind of push-pull negative. There's no safe place to put your money other than yielding 5% in a bond kind of area. So you want to take a look at that. There are no... That's the issue. If we look at QQQ, and I drew a little button hook on QQQ for you, this yellow line right here, so you can see the half circle. We're below that 200-day. We have no confirmation. The 50-day just crossed. If we go and look at a daily, which is what most technicians kind of point to, we're nowhere near a death cross. On that 4-hour, if I go back to here, on the 4-hour, you've had a death cross. Now, the 4-hour reacts significantly faster than the daily because there's 2 candles instead of 1, so it reacts twice as fast. You've got the MACD crossing down. Remember, this is an entry at 358 right here on September 29th. 20 days ago, 30 days ago, but somewhere in that neighborhood. But you're up, let's say, over this time, if you would have bought here and you would sell here, 2%. 2% right there. So it's not a bad move. That's not a bad... If we went up 2% every month in a year, you'd be up 24% every year. So that's a pretty good move. You're pulling back from it. I wouldn't worry too much about it, but remember the negatives that you have. You have rates going up, higher for longer. Is the Fed going to raise? It's earnings season. There have been some, last night's essentially what brought Tesla down, and we'll look at the chart, is Elon being super, super negative about demand and things of that sort. So you're going to have to worry about it. I'm not necessarily buying anything right now. I will be very selective as to what I buy, but doesn't mean that something's not out there. We're going to talk about this Tesla chart in a little bit. But what I want to show is this chart from TradingView. Best performing stocks of the S&P 500 so far in 2023. Meta up 165% right there. NVIDIA up 211%. Tesla, yeah, it's pulling back today. It's up 122%. Over 74 stocks in the S&P 500 are up more than 30% for the year. So when you see this pullback, we'll go back to the charts. When you see this pullback on QQQ, let's look at a weekly and see where we are. That pullback, if you go back to January, we are down here. January, you're at 264. You're at 364 right now. So the pullback, it seems major. It seems crazy. It seems nuts. Understand where we came from. That 200-day or the 50-day bounced off that 200-day. So don't freak out. Pick your stocks. Understand as we pull back and you get into these situations, it's time to add for the long term when you're looking at like VOO. Say you're looking at VOO. You want to buy in a down market. You don't want to buy in an up market. So you want to time those things because, again, you're investing for the long term. I was reminded recently about Bob, and I will put Bob in the newsletter. Bob is a guy over 40 or 50 years of his life invested at the top of the market. It's a great story to read once a quarter, and especially in times like this. But Bob is a guy that basically invested at the absolute highs of the market all the time. And what happened with Bob? Bob wound up becoming a millionaire. By the time he retired, he became a millionaire. Now, past performance doesn't indicate future performance because maybe Bob could have been in, the roaring 20s. Before the Depression. And then all of a sudden the World War started and boom, the Depression hits and whatever happens. We've got war in Israel. We've got war in Ukraine. We've got a House, a Congress that doesn't have a Speaker of the House. There's a lot of issues that are going to start to weigh on this market with the multiples of that great eight being so high. I have no concern of trying to time the market and pull it back. I do think that the fourth quarter is a good quarter. October is significantly a month. Remember, what was Black Monday back in the 80s, the stock market crash. A lot of those happened in October. So just be ready. It's going to pull back, but understand where we came from and then understand where we are. And so if people start selling at this price, I don't blame them. I mean, if you're taking profits, not a bad thing at all. Christian talked about PXD just before, and he said, yeah, he's up 25%. So he took some profits, 29%, something like that. PXD has just been a killer stock. Hey, taking profits, nobody ever became poor with taking profits. So I talk about, my profit strategy all the time. I identify where I want to get out of. PXD is one that I want to hold for a year, and I think I only started buying this one earlier this year. So I don't even own it for a year. It's not long-term capital gains, but I'm up significantly on it. And we'll talk about another energy stock that is talking about buying another energy company, and it's telegraphed in the news, just like Exxon buying PXD was. So you want to keep an eye on the news. You want to keep an eye on certain sectors. You want to continue to look at that stuff. Okay, so I showed that one. Let's talk about Netflix. Netflix first. They killed it. Here's this. I'll include this article in the newsletter. Netflix jumped more than 9%. It's way up even more than that. It's crazy. I think this one absolutely comes to fill the gap that's above here. If we go and look at this 4 hour, it broke the button hook yesterday. I was completely nervous. This is what I posted in the news article yesterday. That button hook that I drew a couple of days ago, it broke it. Now, where are you opening up today? Let's just look at the chart. You remember that little Price is Right game where the little mountain climber went and it played that annoying song? Well, let's see. You closed yesterday at 346. You are going to open up over 400. And let's see. You're going to open up probably right about here, 17, 18% up. Look at that. We talk about a button hook all the time. This is not a button hook. This is going to create a gap that's here. Then you've got this gap up here. Just remember what I always say, any reaction in the market is an overreaction. So I would expect this one to sort of settle down and kind of bring this gap back down. I would say today you'll probably trade between 390 and 410 is my guess. It's a good one if you want to trade it, if you want to just, look at some opportunities there. That 200-day at about 415, that's going to provide some resistance. That's going to, before it gets back up to this gap, it's going to provide some resistance. But you can read all about the earnings. But like I said in the newsletter yesterday, and we can go down here, I like the setup on the fundamental basis because they announced they're raising prices. They got significant additional revenue from their password crackdown. And they announced, here's what I was worried about. I was worried about the guidance from the ad tier because there were several executives that had said the ad tier's not going as well as they said. Well, the ad tier's going really freaking well. So that's where this stock took off. That one worry about the ad tier, that if you look at the ad tier notification probably came around September 11th, September 12th, because this one just started breaking downward. And that was the ad tier. Well, now the ad tier is good. So where are we going from here? I think you're going to continue up. Honestly, I think this one probably gets back to this. If we look at a long term, let's look at a weekly because we're not even close. We're hanging around the 200-day. The 200-day is 412. So you're just hanging around the 200-day. Remember I talked about this death cross? And I know I pointed this out before because I've been holding and dollar cost averaging on this one. But that death cross to me wasn't anything more than it was just taken down, and it was taken down too far. And as the ad tier starts to take off, you're looking at this. Now you're looking at a pullback, but you're constantly in this one. If I were to draw a trend line from the, let's just take this one, and we were to go here, you stay here, you're coming back. In my mind, this is a $450 stock by the end of the year. It's 403 right now. So do you want to buy it? I'm in. I'm probably adding more. That's where I'm at. And I like Netflix. I'll include the article. I am not going to do it justice by going over any of the fundamentals. From a chart perspective, I absolutely love it. Now, from a 4-hour algorithm, we will get a buy-in probably today because that MACD will cross up. The MACD did cross down. You can see exit. I'm going to take out all of these things. Remove all annotations. Yes. And here you go. See that red one right there? It got you out. This buy-in at 375, it got you out. But boy, if you got that buy-in at 375, if you listened to the algorithm and got out, shame on you. And I continued to say, while you don't have confirmation, I want you to hold. And this one just continued up. That death cross did affect it because remember, the death cross came at about 380. You went down to 340. So the death cross saved you. If you got out at the death cross, if say where you're holding up here and you got out the death cross, but you didn't have the chance to buy in. And so you're up 16% today. That's why you want to stay in this. Now, Tesla is another story. Tesla is an interesting one. I posted a chart yesterday on Twitter and on Facebook. And this is the line. If you go back to November 2021, and that's where this top line goes to. Those were the all-time highs. And if you touch 3 points on that, you get that top yellow line. Now, if you go back to January of this year, where the lows were hit and you climbed. Remember, Tesla is up, let me see, Tesla is up 122% year to date. So this bottom line represents the January low, and it touched 3 lines. You've broken it. And yesterday before earnings, slightly concerning that you broke it. But after earnings, it's even more concerning because there's a volume shelf. If we just go to the daily, and I'll show you the daily because that's really where and these are my notes. Lost support on the upward trend, and the upward trend is this line. So wait for confirmation. We're going to have to move this out so I can read it. So wait for confirmation. Valuation becomes a concern based on the earnings miss and quarterly revenue stagnation. And that is going to be this chart. And let me move the camera over so you can see it. This is the quarterly revenue by segment. And so the blue lines are their automotive revenue. The black lines are services, meaning, something like the full self-driving stuff. I think that's included in services. And energy generation and storage are the yellow. You can see the yellow and the black are actually growing. The blue has declined, and it's kind of plateaued. The note that I have, and this is what's interesting, starting with its third quarter results, the company's adjusted earnings of 66 cents on revenues of 23.35 billion missed the estimates. It marked the first time since Q2 2019 that it missed on both top and bottom. Quarterly revenue growth has stagnated over the last year, primarily driven by increasing competition and high monthly payments for new buyers. Remember, higher rates for longer affects this company, because if you're buying a car, 9.9% of the people buy a car on loans. And so auto loans are expensive. The other thing that hurts this company is their margin. As they continue to face increased production, which means that if you don't increase demand, but you increased production, you're going to have to discount your cars. And he's been discounting his cars. So the margin last year at this time was 29%. This year it's 16%. As that margin continues to move down, Wall Street values this company as a car company, not a tech company. Right now it's and we'll go over the fundamentals in a little bit. It's valued as a as a car company right now. Remember, Ford and GM, they have somewhere in the neighborhood of 4% margins, 5% margins. The other thing that killed Elon was, and I'm going to move away from this and we'll move back here. This article right here. Elon, we dug our own grave with Cybertruck. He was so negative on the Cybertruck yesterday. And the Cybertruck, in my mind, is going to be a make or break for the Tesla. The other one is going to be the Model 2, I think is what they're calling it. But that's going to be made in Mexico. They'll have some announcements there. The volume support, so you see right here, that was at 233. We broke down on that. You're at 227 right now in pre-market. I think you trade between you may go down to 200 on this. But here's my guidance on what to do with Tesla. The people who have shorted Tesla have always gotten in trouble. And let me go back here and show, I think we can, let me shrink this down a little bit so we can see the whole thing. Dan Ives pointed this out. We're going to move this over here. There we go. In a nutshell, we would characterize last night's conference call as a mini disaster, as the street wanted to get their arms around the falling margins, constant price cuts seen globally, but instead heard a much more cautious Musk. Thesis unchanged, but challenges. Price target to 310. So he's bringing his price target to 310. I don't think this particular quarter makes you short Tesla. It shouldn't make you underestimate what Tesla can do. If version 12 of self-driving is as good as they say, if Dojo becomes an amazing AI product, you're going to see a significant change in this company and overall in the stock. The valuation is a little crazy. Let's go over here to FinViz. We can look at Tesla. The forward PE, 56. The PE is 68. It's got a $770 billion market cap. That's one of the largest. Remember, I think it was 2 years ago, Apple was the first one to pass $1 trillion. So it's an enormous market cap. It's got a short float of only 2%. Nobody's betting against this one. Like I said, performance year to date up 97%. The average target price is $219. And this one's heavily covered. So that $219, you can guarantee that $219 is going to change, and it probably will come down a little bit. You can see the last one, September 27th, Deutsche Bank, buy. They lowered their price target from 300 to 285. So you're going to have to read some news on this. My guidance is, if you're not in, get in. I think that, even though the PE is high, I think this is more of a tech company than it is a car company. And I think you're going to see that with the Cybertruck. He kind of announced the Cybertruck, and they haven't announced pricing. It's going to be announced on a launch event on November 30th. And the problem I have with it is they haven't released pricing, but he said last night, we dug our own grave, and he was talking about the cost of the Cybertruck. And so I don't think this thing's going to be cheap. When I put in my $100 deposit on a tri-motor, the 3-motor, he was saying it was $69,000. It ain't going to be $69,000. It's going to be closer to probably $120,000. It's going to be above the Rivian. That plain and simple, it's going to be above the Rivian. It's going to be above the Ford. It's going to be a crazy, crazy one to do. So be careful with it. Like I said, I have owned this one in XLY. XLY is basically Amazon and Tesla. XLY is down 1% today. So you protect yourself against those huge swings. Consumer discretionary. If we go over here to, let's go to Seeking Alpha, and we'll do XLY. And I like Seeking Alpha to look up the holdings in ETFs and things. It's just a nice, easy way to look at it. Oh, come on. XLY. There we go. Oh, no, I don't want SLY. Apple is great for some of their stuff, but their autocorrect on something like this is just But I am still long Apple. Let's see, the holdings right here. If you go here, Amazon is 22%. Tesla is 20%. So 42% of this entire ETF is Amazon to Tesla. So you protect yourself against that by owning this one. These top 10 names represent 71% of the actual consumer discretionary. So that's why I say, hey, I'm fine holding Tesla in the XLY. I don't mind it. Holding it on its outright, a little bit nervous about that one. But as it gets towards 200, I will absolutely come down and buy that one. Spirit Airlines soared yesterday. Absolutely soared. I'll include a Seeking Alpha article on this one. They surged around 20%, reaching an agreement with Boeing to support production stability. The agreement comes after quality issues with the Boeing 737 MAX led to delivery delays in August. The company aims to improve quality and boost deliveries through collaboration. So basically, they got one of the largest companies in the world, Boeing, to back them. So Spirit is like, okay, the stockholders are, hey, you're down here at 17. You got Boeing behind you, and they're going to guarantee that they're going to stay with you, even though you've delivered shitty fuselages. Yeah, that's going to bump your stock up. So remember this one, when the fuselage thing started, that's when this one really started going down. I think it might have even been April, somewhere around there. That might be the big gap that you're seeing. You're seeing a little turnaround. September 25th, $15 here. You're at $21. That 50 days just started to move positive. You got huge volume. Look at that volume spike. I would not buy this one right now. I would wait a little bit, wait a couple of days until this news kind of settles out, because this gap here between 20 and 18, that scares me. The gap between 2250 and say 2270, I think you'll see that one filled. That's a decent move on a $22 stock. The gap's up here. I think you're going to come back up here. I think you just have to get through this bad news. Now, Boeing, on the other hand, I think this is the stock that had Jim Cramer crying the other night. The hubris. Yeah, I think he was actually physically crying on his show the other night. My buddy texted me saying Jim Cramer's having another Facebook moment. But 187.85. Yesterday it got a cross up here, 187.85. I don't know that that's the bottom, but I do like this company coming up. They have earnings coming up. Lord knows what they're going to say. I don't know if they're going to take the delivery of or if they're going to start charging China for the delivery of those 737s that are sitting over there. You had this death cross, and you had the death cross, by the way, when the stock was trading just below 200. But at 187, let's look at a long term on this one. I think you're looking at a pretty good buy on this one. You've got this gap down here to 150. I don't think you're coming down there. You're just starting to get the golden cross here. You had the golden cross right here at about 201. It looks like on the weekly. This is the weekly of Boeing. Your MACD is kind of still falling, so it's not bullish per se, but I don't think it's bearish because your RSI is down at 36. So I would definitely watch that one. Here's Pioneer Natural Resources. We talked about PXD. Let me just go over it kind of on the podcast, since I think a lot of people did what Christian and I did, which was buy in to PXD. And I've kind of given guidance that, hey, I'm waiting for this earnings, and I'm waiting for their announcement of a special dividend. I do think a special dividend is coming. Now, here's the problem. I think that little turn, we talk about button hooks. You're seeing it right now, 251. I've talked about the top price, I think, is 257. See that MACD right there? It's kind of turning over a little bit. Your RSI is at 65. So this one's overbought. You could start to see that little button hook right there. If you'd like to trim, I don't think it's a bad idea to trim. We talked about top hitting all-time highs and 52-week highs, and how stocks typically don't continue to soar after that. The 52-week high of this one is 260. So you're about 2-3% below that. It's not far off. And when we looked at the deal, I believe, just in memory, that 257 was about the price that you were going to hit on this one. 257. So what's the difference between 252 and 257? $5. I mean, it's really not that much if you wanted to trim. If you're holding on for something, the only thing I would be holding on for, and the only reason I'm holding on, is because I haven't owned it a year yet. So I'm going to pay income tax, probably 20-30% on this one if I sell it now, because it's included as income, because it's a short-term holding. If I just wait a year, I'll pay 15% on it. And the year is basically, I don't know how it works when it transitions to Exxon, but it shouldn't be done by the time I'm holding it for a year, because I think I first started purchasing this in March, somewhere in that neighborhood. So I do think that I'm particularly going to hold on to this. I don't need more Exxon. I'd love to get out right now, but I got to take a look at my tax situation. If you're holding this, and you don't have a tax situation, say it's in a retirement account, say you don't necessarily care about holding Exxon, you don't want to add Exxon, I'd probably trim it, to be honest with you. And just like we talked about with this one, and I do think, if I didn't bring it up, I think they're going to announce a special dividend, because when we go over here to Seeking Alpha, you can see the special dividend back in September was 59 cents. Not big. The actual dividend was $1.25. That's what they've been paying. 59 cents was the special dividend. Go back to May. The special dividend was $2.09. Go back to March. The special dividend was $4.48. Go back to November of last year. The special dividend was $4.61. Go back to September of last year. The special dividend was $7.47. When oil goes up, these guys pay it in a special dividend. Oil has been going up. So I expect a special dividend announcement, probably a good one. So that's why I'm holding. I would expect it again to be paid out probably in November. Just look at the history. I think it's going to be this one. Last year was November 29th. So you're going to have to hold on to it for quite a while to get that special dividend. And it probably will flounder between 250 and 260. I don't expect it to go down below 250 because I do think that this deal gets done. And it's pretty solid because I don't think there's any regulator that's going to turn this one down just because it will bring down gas prices for everybody. And there's nothing that really should prohibit it from going through. Now, We looked at Netflix, we looked at Elon Musk. I'm going to click on this one because there is an article in Seeking Alpha, Devon Energy studying possible deals with Marathon Oil, Crown Rock. Crown Rock is a private company. I don't think you can trade it, but MRO, we've talked about MRO. That is one. This is just like when Exxon announced, they didn't announce it, but it came out in the Wall Street Journal, hey, we may be buying this company. Well, MRO is kind of in the same situation. Yeah, it's run up quite a bit. How much are they going to pay for MRO? I don't know. I mean, you know, your guess is as good as mine. If we look at the weekly on here, we kind of just broken out a little bit on the weekly. You know, you're well above your 50-day. Your all-time highs are up here about 33 or so. I think that's where you're going to have to see a Devon Energy come in and buy them at about that price. Devon Energy, we talked about, it got over 50. It's down 2% again. It's at 48.96 right now. You can see yesterday got up to $50.84. Sell over 50. You know, buy it under there. Look at how clear the $50 has been since May of this year. It's been clear. I mean, that's been the price point to buy and sell. So once it gets over that, you sell it. Once it gets under that, you start buying it. Now, remember, the buyer, the stock always goes down. The buyee, the stock always goes up because they always pay a premium for it. So here, this is another good news article I will include. This is basically we talk about the guys who invest in utilities as being old people in a wheelchair with a blanket over the top of them. And they always talk about the good days, with their glasses sliding down their nose. That's this dude. How'd I invest $1 million today? I don't think his strategy is wrong. It's just different than mine. And so, I wanted to provide this one because we'll get into it with the social. But Alex asked me wants me to look at one great dividend. So I did a scanner on Seeking Alpha, and we'll go into this. But this guy's a dividend investor, and he's got some flat out great strategy here. I don't particularly agree with it, but I do think the strategy is solid. It's provided with a look back, and he does a good job of explaining himself. So I don't hate him. Not my strategy, not my thing, but I am going to include it because my strategy doesn't work for everybody. And I like, maybe I'll do a paid newsletter how I'd invest $1 million today. But I liked this article. I really, really did. So I'll include it in the thing. Now, Brian wants me to look at NEO. Let's take a look at NEO. Brian from Facebook, I think. Yeah. Brian asked me a couple of days ago to look at NEO. Here's my thing on NEO. And I don't purport to be an expert on NEO. I don't know NEO. I know if you want to go to YouTube, let's go to YouTube and we'll just type in NEO battery swap. Let's do this. NEO battery swap. And you can find a whole bunch of things. It is so cool to watch. It is absolutely amazing to watch the battery swap of the car. And it's cool. It's from, a while ago. There's nothing really new on this one. This is NEO's big claim to fame. The problem that I have is somebody can drive their battery and you pay a lease for the battery and to change it every now and then. So there's a monthly cost there. I don't think that model works. And the reason I don't think that model works is I think Tesla has figured out battery management. My car is still, I think it's less than 5% degradation for 5 years now, 5 years old. So I'm going to have to pay to swap out the battery, 15, 20 years from now. That's essentially it. But I don't think that these guys do a very good job of it. It's a Chinese car company. You got to worry about the valuation of this one. The other thing is, remember, you're buying actually a piece of paper in the Cayman Islands because it's illegal for any non-Chinese citizen to own a Chinese stock. So what they do is they set up these paper companies in the Cayman Islands, and that's what trades on the New York Stock Exchange. If you want to buy the actual NEO company, you have to establish citizenship in China, and then you can buy that, and good luck with that. But NEO, I'm not a fan of. I mean, I got to tell you, I just haven't. I've traded this one in the past. It has been a solid trade. But when you look at this to own it, it's just been on this downward spiral. And back here, I even think this one back here, I think it was 2022. It might have even been earlier than that. One of these other pumps, maybe it was March 2022. It was sometime in that range where they were almost going to go bankrupt. And then the Chinese government gave them money. And that's essentially what's happened. And it might even be here, where back in 2020, where it just died with COVID. And then it came back and the Chinese government kind of funded it. There's some manipulation here, I think, with these Chinese companies. I don't want to own them. Do I want to trade it? Absolutely. Now, on the trading platform, let's see. Would I trade it right now? Let's look at the most recent. We'll go back to the 4-hour. I'd probably use the 65-minute, to be honest with you. I mean, I can't argue with the fact that, look, in June, it was trading for $7.76. You traded it all the way through August, you doubled your money. That's why I say I think it's worth trading. Is it worth where it is today? Probably. It's probably going to go down even further, because if we look at a long term of this one, you're making lower highs. It's just, the trend line just doesn't make sense to do anything but trade. So Brian, I hope that one makes sense to you. I mean, even the fundamentals, I don't think that they're making money. Their market cap is $12 billion. They're not making money. Price to sales, 1.73. Short interest of 8.93. I mean, you got 3% on Tesla short interest. These guys have almost a 10% short interest. Year to date, you're down 18%. I don't think that this falls into a company that, oh my God, they've fallen so much. Let's look at it again. Rivian, another story. I think Rivian for the long haul. What was it? Amazon announced that they have 30,000 Rivian vehicles in their fleet today. They're hoping to have 100,000 by 2025. So it might have been 10,000 that they had. So it's a long cry, a long ways away. But I'd rather own Rivian. And you're not, by the way, you're not getting a deal with Rivian. The price to sales on Rivian, 5.6. So they're losing $30,000 for every car that these guys sell. This is not a value company just because it was trading up here for 27 in August and is now 17. I do think you get back to 30 on this one. I think they continue to improve. I think they continue. These guys aren't going out of business. Amazon has too much money in here. They just did a bond float, and that's what brought them down. You can see October 10th, UBS upgraded, $24 price target. Where are you trading today? 17. That'd be a huge move. October 2nd, Evercore, in line, $35 price target. The average price target is $28 and you're trading at 17. I don't think it's crazy to see that, to actually look at that one. But I would trade it. I wouldn't own it. And Rivian, same story as I would trade it rather than own it. The only one that I would own of the electric vehicle companies is Tesla. And I think the only reason I would do that is because I don't believe Tesla is actually a car company. I think they're a technology company. So a technology company is going to come with a significant multiple. A car company isn't. And so Rivian, I think they've got the backing. I think they will continue to be a good company. I think they will pump it, and I think they will get to $30. But it's one of the honestly, even when the Cybertruck comes out, I think Rivian's actually a better SUV than the Cybertruck. Alex, every day I ask on Spotify, hey, what stocks do you want me to look at? And Alex says, one with great dividends. I'm the kind of buy and hold type. Thank you for all that you do. You're welcome, Alex. So there are two things, Alex, and I'm going to include both of these in the newsletter. A game changer for dividend investors, Seeking Alpha's new dividend grades. They give grades to dividends. So you can take a look. If you're interested in Seeking Alpha, you can take a look at this one, where they give the dividend trades. I like this one. You can see it, and I think this is part of the free service. If you want to upgrade to the premium service, I've got a link down below that gets you $50 off. It's $189, I think, for the year. But if you're interested in that, I think this is a great one. They give dividend safety, dividend growth, dividend yield, dividend consistency. I like this. And when you mentioned you wanted dividend, I saw that. Now, the other thing that I did was I went in here and I used a screener on Seeking Alpha. You can use the FinViz screener. Honest to God, there's a screener up here on the left, and you can find ETFs. You can find things that are based on dividend. If we just go over here and you look, there's a dividend. I forget where it is. I haven't used this in a while. But there's a dividend option here where you can say, hey, what percentage dividend does it pay? Yeah. Do I have it? Let me see if I have a dividend. Here we go. Buy and hold. No, I don't have a dividend screener. But there is a dividend up here in FinViz. I particularly did it in Seeking Alpha. And what I did was I had some, you can look at, what did I do? Let me see. Edit filters. I've got quant ratings between 2.5 and strong buy. I've got Seeking Analyst ratings between 2.8 and strong buy. I got Wall Street Analyst ratings 2.8 to strong buy. I've got the dividend yield between 3.2 and greater than 8%. Consecutive years of growth, 4 to 8. Performance, 5-year, I said anywhere from 20% to 300%. And it came up with this list. And the number one, it's funny because the number one quant rating is 4.5. SA rating is 4.2. Wall Street rating is 3.42. Dividend yield is 9.37. Valuation is A. Growth A. Profitability A. Momentum B. Earnings per share revenue 3. It's innovative industrial properties. I think it's a REIT. I just don't know. Let's see. IIPR. Let's look at IIPR on a FinViz. And we'll read the description of it. I think there's a description on Seeking Alpha as well. IIPR is a real estate investment trust which engages in acquisition, ownership, and management of industrial properties. That operates through the following geographical segments: Arizona, California. So it's a REIT, 100% a REIT. We can take a look at the chart. Let's go back to Seeking Alpha because you can take a look at the ratings, financials. But this one, factor grades, A, like we said, growth, profitability. Dividends, we can go and look at the dividends. You can see the dividend grades right here. Dividend safety, B+. Dividend growth, A. Dividend yield forward, 9.37. That's nothing to shrink about. IIPR, let's put it into the chart and see where we are on IIPR. But I'll include a link to my entire Seeking Alpha scanner for dividends, and it will take you right to that list. If I just click on it again, I named it Daily Stock Pick Screener for dividends, I think. Daily Stock Pick Dividend Screener, yeah. And so you can take a look. The majority of these are going to be REITs, and so you want to be careful with REITs. I'm not a big believer in REITs, but if you can get your total appreciation here, let's just look at, let's go charting. IIPR, we'll go IIPR, and we'll select the metrics and we'll say performance total return because we want to include the, and let's select symbols and we'll do VOO. We want to include the dividend. So you can see via IIPR over 1 year, you're down 10%. VOO up 17%. 3 year, you can see VOO is up 31%. IIPR, you can see it was beating it well before that. Look at the 10-year, and you can see IIPR up 500%, VOO up 195. So it does matter when you buy it, and we've seen REITs come down recently. If we look at a quarterly of this one, you can see the chart. It's kind of come down from its high up here of $259. Which was back in Q4 2021. It was the high 288, and it's at 75 now. And if we run the 4-hour and we look at this one, again, remember how people use dividends. It's for income. It's not necessarily somebody in their 20s who says, I completely want to grow my portfolio. It's somebody who needs income because the actual asset valuation actually usually goes down. When you pay a 9% dividend, your asset appreciation usually goes down. And that's just the way that it is. IIPR, buy here at 73. Right after the dividend was paid, just continued to go down, hit that floor at 73, kind of moving back up now. Their earnings are coming out November 1st. I don't know that this is a great stock. But Alex, if you want to find dividend stocks, I'd say that's exactly how you do it. You use Seeking Alpha or you use FinViz, one or the other. Take your pick. And you can find some screeners there to actually screen. Cecilia wants me to look at Meta. I continue to say anything under 300, you buy this one all day long. Anything over 300, I think you can sell. I'm holding. I'm adding to my position. Look at how well on this downturn that this stock has held up for the last month. And it's been trading again between 280 and 320 is kind of the range. You've got earnings coming up. They're going to print money. They're going to talk about their headset being superior to Apple. They're going to talk about new operating systems. They're going to call out Llama, their large language model, being open source, where you can actually train your own stuff using Amazon Web Services, things of that sort. And we'll go into Amazon a little bit. But Meta, absolutely 100% a buy. Now, what you have to know is that we're way up this year. Again, we went over those 50, the S&P 500. Meta is up 165 year to date, 165%. And just look at this short one. This is from the January. That's where you're up 165%. Your all-time highs up here around 400. I think it's around 380 is the all-time high. You're heading back there. This company just prints money. On a weekly, those Bollinger Bands are cinching up. What does that mean? That typically means it's going to move on a big direction, either up or down. My pick, up. Because I don't think that this is one of the lower PE of the great one. Their forward PE is only 18. So if they continue to grow, that forward PE is probably going to move more towards 20, 25. So they're up 164%. Short interest, 1.3. Nobody's shorting this one. Absolutely nobody's shorting this one. There's no reason to short this one. They're printing money. Market cap, $819 billion. $22 billion of income. I just can't imagine that there's a bad thing about this stock. Because what they've done this year is pull back the spending on the metaverse. Now, they're going all in on the metaverse, but he's not spending the amount. I mean, they just announced layoffs in the metaverse. So Meta, I'd stick with that under 300, but right now you have all the confirmation in the world to buy. It's over that 9-day on a short-term basis. It's kind of getting a little bit of a button hook. Would I buy here? If your time frame is 3 to 5 years, there's no difference between buying $1,000 at $319 and buying $1,000 at $300. 5 years from now, when it's at $600, you're not even going to notice that $20 per share because you only put in $1,000. So you're not going to notice that. In my mind, I think this is, again, I post on Facebook, I post on Instagram. I don't use WhatsApp, but everybody I know use WhatsApp. I use with my Android friends, rather than green bubbles, I use Facebook Messenger. So I constantly use this. They constantly make money off of my services. They're getting better at things. I think the Apple privacy stuff, I think Zuckerberg's he's very good at copying stuff. So I have no doubt in my mind it'll be fine. Amazon, and I'm not saying that it won't go under 300 when the earnings come out, because it might go under 300 for the earnings coming out. But I've constantly just added to my position on that one. Amazon, Nathan wants to know, hey, what's Amazon doing? Amazon's price target, 130. Honestly, it's just up and down. It's going to be around 130. I think what's brought this one down from the 140s to 130s is the Justice Department bringing a suit. Now, here's the thing about that Justice Department suit. It looks to break up Amazon. You, as a shareholder, wouldn't be hurt if they broke up Amazon because you'd get the entirety of Amazon in separate stocks. You'd get the consumer stock. You'd get the AWS stock. You'd get any other services stock. So if it's broken up into 3 different companies, that would be a good thing because you could dump the consumer stock, which is the one that loses money, and keep the AWS, which is what grows. So it would be a better situation if they broke it up. What's the situation if they don't break it up? It continues to rise. Honest to God, this one is one of the most undervalued in my mind. New $170 price target from an analyst. I like to add this anywhere under 130. That's from a while ago. That's absolutely from a while ago. And you're looking at this $170, a 30% gain. So I do think this one right now, you can see on the weekly here, we've had a MACD cross down. The RSI is at 55, a little bit extended, but the Bollinger Bands are cinching up. You're under that 200-day. I like this to get above the 200-day. We haven't been below that 200-day for in fact, you go all the way back. I mean, let's even look at, a long-term one. Let's look at a quarterly chart of this one. Because right now you're just above the 9-day right there. The 21-day is the yellow line. You know, you see this pullback here? It's just like this. Look at 2004, where you were trading at $2.59. And then by 2006, you were down at $1.49. Are you upset? No. I mean, that's 2 years of pain, 3 years of pain. But you continually just innovated, continued to grow. And now, am I expecting this kind of growth to continue forward? No. Amazon probably can't grow that much. I always bring up GE kind of as the back. But honestly, Nathan, I love it. I love Amazon. I have it. I own this one in the XLY. Say you want to, Tesla and Amazon, just buy XLY. 50% of that is Tesla and Amazon. Here is TBT. This is the ultra short of the 20-year treasury. Now, if you think yields are going to come down, continue to go up, buy this one. This one just got another cross up here. You bought it here back on the algorithm September 5th at $35. You're $45. This is the ultra short of the Lehman 20-year treasury. So while the 20-year treasury, the value actually goes down, the yield goes up. This actually is the ultra short, so this one starts going up. So TBT. UVIX, this is the 2 times levered VIX futures. This one got a cross up here at 38.72. You continue to climb. These are scans, by the way. PSQ. This is ProShare Short QQQ. This is if you just don't want to short it and you don't want to buy SQQQ, you can buy PSQ. UVIXY. We talk about the VIX a lot. If we go over here to Seeking Alpha, we can just type in VIX and we can look at the S&P VIX. This one wants to be above 20. It's kind of climbed up there a little bit, but you can see it's down 37% year to date. The 5-year, the VIX has just kind of floundered a little bit. This was COVID back here. The VIX went all the way up to 60, somewhere in that neighborhood. 80. So UVIXY is an ultra pro, a short of the VIX. So if the VIX is going to down, if the VIX is going to go down, then UVIXY is going to go up. So UVIXY and SVIXY is the other one, the inverse. SARK, this is the short of the ARKK. So as the ARKK goes down, this goes up. This had a buy here at 41.77. You're at 42.15 right now. SARK. HIBS, this is the 3 times levered bear. So this is 3 times levered of the S&P going down. And you can see if the S&P goes down, this one goes up. $40.02 right here. Got out with a 16% gain. Again, it's 3 times levered. So this is a trading stock. SQQQ. SQQQ short of the QQQs. We got a buy in here at 19.18 yesterday, and we're continuing kind of that trend up. Right now you're trading at 19.55. So, again, these are trading stocks. Here's ones that you may want to invest in that have a buy. IBM. It's on the Dow. This is a solid technology play. Nothing's expensive. They're getting into cloud stuff. They're into AI. I mean, shit. Remember when Watson beat Ken Jennings? That's AI. So IBM, super AI player. And they're solid. The other one, Zoom. Zoom got a buy here at 63.13. Do I think you should buy it? I don't think so. I mean, Zoom's a great company. I think they're just looking for somebody to buy them. I don't think that they can survive on their own. So they're looking for somebody to buy them. And I don't think anybody that wants to buy them doesn't need video conferencing because they've already developed it on their own. So Zoom kind of has some cool features and stuff, but I don't use it that much, but of course, I don't have a freaking job. Okay. If you like anything on this podcast, the one link that you need to remember is Linktree, linktr.ee/dailystockpick. linktr.ee/dailystockpick. You can get to all of our social groups, the private Facebook group. You can get to my Twitter or X, whichever one, Instagram, YouTube, Twitch. I'm not on Twitch, to be honest with you. It's up there. I may start using it. I kind of like some of their features, but I've been using YouTube more. Spotify, and then Apple Podcasts. If you want to tip me and say you bought Netflix and you're up 25% in a freaking day and you wind up selling, tip me. Tip is right there. Venmo. If you don't have any social media, you can email me right there. There's an email thing. And Substack is the newsletter. If you like my charts, TrendSpider right here, you can get access to my 4-hour algorithm. Click there. I think it's $480 is what I save you versus, let's go down to plans and pricing. You need this elite level, $468. It's 40% off. You don't get the free 7-day trial. This one, it takes $79 off and $780. But that's the deal. $400. If you want the charts and want access to my 4-hour algorithm, sign up over here. You click on that, sign up. Then you email me. And once you email me, I email you back a welcome letter. That's how it works. If you want $50 off of Seeking Alpha, I love Seeking Alpha. Like I said, I set up that dividend screener for Alex. And it's an all around. If you don't want chart and you just want to plug and play, I think Seeking Alpha at $189 is a great deal. I love getting the morning briefings on my portfolio. You can easily import your portfolio. There's a lot you can do with Seeking Alpha. I'm just starting to get it into my system, but it is something that I'm using absolutely every day. Webull. Click on this link. I've got a link down below if you want to use it. Webull, you get up to 12 free stocks. You can deposit $3. I love their morning briefings like I get free. So if you sign up for Webull, you get that free. Seeking Alpha has a little more focused one, but I like the alerts from Webull. The Daily Stock newsletter, every day it's free. Weekends, I do post a paid one. And if we go back here, I think I did a paid one. My apologies for spamming people. I think I may have spammed people. What was it, Tuesday or something? I did a paid newsletter, this one right here, One Help Creating a Trading System. Here's a guide to get favorable setups and finding potential trades. It's a solid four point system where you just kind of set up and you look at it. But if you want to pay, I think it's still $80 a year. I'm going to up it to probably $99 later this year because I do have some really good paid content on there. I've been getting some really solid feedback on that one. But if you want that, right down here is that. If you're paying anything more than $25 for your phone service, visible. And by the way, I do these ads at the end so that you can skip them and you don't have to say, but if you like my entertainment, you can stay and listen to all this stuff. Here's our plans. And this is what I have. And by the way, while I was in Philly, the hotel didn't have Wi-Fi. So what did I use? I used my $25 a month visible service to be able to post those videos that you saw for the last few days. And the newsletters that you saw for the last few days, because I needed access to the charts on TrendSpider. I couldn't stream. I absolutely could not stream. But you see right there, unlimited mobile hotspot, $25 a month. You get expanded service for $35 a month. You guys are crazy if you're paying those $80 a month services for Verizon, AT&T, or even T-Mobile. I mean, T-Mobile gets you, down to $45, but you got to have freaking 4 lines on your thing. Who has 4 lines on their thing? I'm a single person, so I pay for my own. If you're buying a Tesla, if you're thinking about the Cybertruck, use my link right here. You get $500 off, 3 months of full self-driving capability as well. If you want to see, right now here at home, the quality is so good because I have 1 gigabyte service. I think I pay like $60, $70 a month for my service. I'm on a special, but it's 1 gig service and it's AT&T fiber. Here's the difference between your cable provider, and this is coming from a former cable executive. The difference between fiber from the cable companies and fiber from the telephone companies, it's symmetrical. So the reason I look so freaking cute on YouTube is because I have 1 gig service at my house. It puts this nice little filter, and I get this nice. My hair is actually gray, but you see it as blonde. I'm lying. But the 1 gig service I have right there, you get a referral. You get a bill credit, and I get a bill credit when you sign up. And again, if you did Netflix, just tip me on the Venmo stuff. I prefer Venmo. Okay, anything else? I will answer any of your questions. Feel free to hit me up. It's good to be back. I will talk to you guys tomorrow. So, okay. Welcome back, Sherry. Sweet. Ooh, Christian, I hope you haven't. Devin has just been a nightmare this year so far. And I still don't get it. Solid company, solid earnings. They are going to go down if they announce that any kind of purchase. So it's going to be a little bit crazy. Mattel received an upgrade. Mattel had been since their last earnings. I mean, you went all the way up to 22. You've had, this one down at 18 if you bought Mattel at 18 right before the Barbie movie. That was, You've been kind of capitulating here, getting down to what? Just below 20? It looks like $20 is probably your buy on Mattel, Sherry. At least recently, since it's covered this gap right here. The next gap to cover would be up here at 23. I don't think you're wrong on that one. I think, Mattel's a solid company with good management. Hey, Lucas. Some people say I'm a legend. MEG Energy. Let me see MEG Energy. I'll take a look. Montrose Environmental Group. Do not forward this to your CEO. Ooh, that's ugly. Here's the thing, Lucas. Why the hell is your CEO letting the stock do this while energy is going up? Let's look at MEG. Let's see what Lucas does. Dude, it's got an $837 million market cap, so it's not huge. Tiny little company. You have 2,900 employees. Not making money. It's losing $54 million. Price of sales 1.49. It is, let's see what they do. Environmental services company that engages provision of air measurement and environmental laboratories. The firm operates through 4 segments: assessment, permitting, and response, measurement, and analysis. The assessment, permitting, and response segment provides scientific advisory. So you're not in energy. The remediation and reuse segment provides clients with engineering design. I get it. Services company. Now, here's the buys. 32. They're not buying huge amounts. And Lucas, it's Meg Energy. Let's see, Meg Energy. I'm looking at the wrong one. There it is. MEGEF. That's a better stock chart. I don't see it on FinViz, though. Let me see if... There it is. We don't have it on FinViz, but come on. But I have it on Seeking Alpha, so I can look at stuff. Financials, income statement, smaller company, cash flow. Solid cash flow. It's turned profitable. 2020, you guys were negative. 2021 started to turn positive. Valuation doesn't look bad. I mean, seeking analysts hold. It's not covered on the quant. Profitability. Gross margin is 45%. That's not bad at all. Momentum. We'll take a look at the chart. I mean, here's the look. I mean, 1 year, Lucas, legend, 73%, 71.3 versus the S&P up 15.98. Let's see. 5 year, still doing well. 10 year. 10-year energy probably would not be very good to look at total return. Let's look at the 10-year. Yeah, 10-year energy just was not very favored up until 2020. Here's your moving averages. Let's see. Summary. Let's look at the peers. SM Energy, Magnolia, Denbury, Viper, Venom, and Cord. You guys are about, looks like, market cap wise, a little bit larger than Viper, a little bit smaller than Cord. Yeah. What I'd like to see here's October 10th. An energy company focused on sustainable in situ thermal oil production in southern Athabasca oil region of Alberta, Canada. The company develops oil recovery projects that utilize steam-assisted gravity. It's fracking. It's fracking, right, Luz? I think that's what steam-assisted gravity is. And again, I know nothing about this industry or anything, but your stock price looks solid. Here's the momentum. Institutions own. Whoa. Institutions own 50%, almost 50% of the stock. Peers. It's not covered. And here's what's funny. The peers are covered. Strong buy. Hold. Simple moving average, 10-day is at 19, so you're above 4% above that. 50-day, you're 9% above that. 200-day, you're up above 2 and 20. So let's look at the chart. I think it's a small cap, so I don't think it's trading very heavy volumes. I don't have the volume amounts up. Yeah, it's in the Ks. So 300,000 at each level and stuff. Oh, okay. Yeah. Shit, look at that. I mean, buy at 19. I would say, here's what I would say. And Lucas, if I'm just looking at it from a chart perspective, solid. I don't think I'd be in and out of this one. I think I would probably be, I think you may have even asked me about employee purchase. There's no reason not to buy this one on employee purchase. The all-time high is back here at 1990 and you're at 20. I mean, you just passed all your all-time highs. That's the only thing that I can see wrong with this one right now. You're in the energy space. The only thing I see wrong with it right now would be that you're at all-time highs. But like you said, if there's growth and that they're continuing to grow, there's two things that will benefit you from this. If you're at all-time highs and you're that small of a company, but you're actually showing growth, you could get sold to a larger company. And if you get sold to a larger company, that's probably going to be a $40 per share stock price for them to actually buy it, because your CEO and your board are going to be able to ask for significantly more money just based on the growth that you've shown. The other thing is you sit out there and wait. I don't know. Do you have a dividend? Let me see. Meg Energy. I didn't see anything about a dividend. But he said, no. Okay, so you don't pay a dividend. That's the only thing that you have probably versus other energy companies. But when you say, so, and this is what I know about energy stuff. If you don't pay a dividend, you better be freaking growing, because the capital dollars that you're not paying in dividend better come out in the share price dollar amount. The reason Pioneer and Devon and those guys pay such a big dividend, they don't put exactly the amount of money, their top profits back into the business. So you guys are expanding by actually putting the capital back into the business. Yeah. I think it's solid. I mean, honest, Lucas, if you're the one that asked me, and a couple of people have asked me about employee stock purchase, if you're getting this at a discount, like a 10% discount every 2 weeks with your paycheck and stuff, no reason not to buy it. I mean, look at that stock. Look at that share price. 72% in 1 year. Look at the 5 year. Again, you match this against the S&P and you're doing fine. It's just the long term that you got to worry about, because if energy does, say, for instance, OPEC, or there's some new technology, or all of a sudden everybody starts going nuclear, then you got an issue. That's when you have an issue. But I don't think that's going to come overnight. And I think over the next 5 years, fossil fuels and the way you're pulling it out of the ground, I think it's still fine. And I think energy will continue to go up because I think OPEC will cut production. I think the United States will start to, we're not going to increase our production out. We're just, Rick Perry got just made a fool the other day on CNBC, the former energy secretary, who knows nothing about freaking energy. It was a complete, Trump appointed him energy secretary for him to back out of the primary races. Thanks, Lucas. Yeah. But I don't see an end to the fossil fuel. I do see us exporting less, but not producing more. I see us, Rick Perry started saying, well, we're not energy independent. And the interviewer said, yeah, well, we export more than we import. And he's like, yeah, but we export less than we did a few years ago. Well, that's the point. If you're a nationalist like Trump was, you want to export less. Why were you exporting more? Was it because you're from Texas and you got some kickbacks from energy companies because they wanted to drill more and export more and sell it overseas? Yeah, that could be it, douchebag. Don't get me started. Okay, it's 10:30. Your boy has to go. I appreciate you guys coming on. I will be back tomorrow. High five on anybody that did Netflix. High five on anybody that got that. Tesla, I wouldn't worry about it too much. I'd probably add to it, to be honest with you. I think as it starts to come down, we can look at a 5-minute on Tesla. I think it started to come back a little bit, to be honest with you. Let's get out of the strategy tester and we'll go to a 5-minute. There we go. Hasn't started to come back, but 222. I mean, you have, if you go to a 5-minute chart and you look at this one, I mean, look, it's oversold. That gap right there, that's the open gap. You're going to see it on a 4-hour. You're going to see it on anything that kind of opens up. See the gap? Yeah. That gap's going to get filled. It's up 135%. Don't worry about it. I think you add to this one. The problem is finding the bottom. I just don't know where the bottom is. That's why, XLY, we're down 1.23%. Tesla's dragging it down. But at least I'm not down 8% on Tesla because I just don't own it. VOO, absolutely even at 395. United Health up at 130. 530. Taiwan Semi had a remember I said this is a $100 stock, so you should be buying it at 80 something? Yeah, I continue to, this one, they're solid. They're going to continue making these chips for everybody. And it's, the only thing you have to worry about is China. You have to worry about China. But you got this gap now between 89 and 92. But you got gaps up above it as well. You got this gap here at 97 to 98. I think you're back up at 100. So buying at 93 is not crazy. It's a little bit extended, but yeah. Lucas, thanks so much for pumping me up. I'll put out the newsletter and I'll edit this video and stuff and get it up there. But you guys already watched it. You guys don't need to listen and stuff. Okay. Take care, you guys. I will talk to you tomorrow.